It's morbid, but financially, what would happen to your family if you died? Well, today we're joined by Dylan Bond. He's the owner of Bond Financial Services. He's teaching us about life insurance. Now, who needs life insurance, and really, what is it for that matter?
Well, obviously, life insurance is a financial tool that people can use to, in the event that they were to die, protect their family financially by leaving them behind tax-free distributions from the life insurance policy to offset the loss of the income or the assets that person could have provided over time. There's many different types, though, as we were talking about earlier.
So who are good candidates for it, and kind of what part of your life should you be in? Is there a general rule?
Yeah, when you're younger, obviously, you're starting out, you have a small family, you have a mortgage on your house, you're probably going to be looking more towards a term insurance that's going to be very affordable. It's going to give you a higher death benefit for a lower cost because ultimately you're just renting the insurance, and at the end of the term, it's going to expire worthless, and a high percentage of them do. But in the event that you're unfortunate and pass away, it will leave a tax-free death benefit that will help the surviving family offset the financial burden that is put on them.
It seems to me that a lot of people think that life insurance is purely for when you die, but it can also kind of be used as a financial tool too, just kind of like a 401k or an IRA.
Well, we work predominantly with people that are over 50, getting ready for retirement or already in retirement, and at that point in time, what we're doing is we're looking at permanent life insurance policies, and again, in the not so distant past, life insurance companies have started to address the healthcare concerns that people have going into retirement. So not only is there long-term care insurance that can help finance long-term care problems down the road, but you can also now get life insurance policies that have the ability to use a part of or all of the death benefit from that policy to finance long-term care. And in the event that you don't need it and eventually pass away, it's going to leave a tax-free benefit to the beneficiary that they can use for various different things.
Well, that's comforting because we were talking, and sometimes medical expenses as you age can be hundreds and hundreds of thousands of dollars.
Right.
So it's good to be protected. Now, there's different kinds. Let's blast through those because a lot of people just think life insurance is life insurance. We have term life insurance.
Yeah, again, term life insurance is all you're getting is a death benefit. You're not getting cash value. You're not getting living benefits for the most part. What you're doing is you're paying a low cost per month to get a guaranteed death benefit in the event that you die. If it's a 20-year term, at the end of 20 years, the premiums are going to go up, and you're probably not going to want to pay the premium at that point. So they're fixed term policies to cover a period in time that you might not have the cash flow to afford anything else.
I got you. Okay, that one's a little tricky to me. So in other words, once you pay it, and if you don't hit your term, does the money vanish, or do you get it back?
Well, at the end of the term, if you're still alive, you've rented that insurance for that period, and then it basically goes away.
Oh, so it's like getting a warranty on a refrigerator.
Yeah, and again, there's different term policies out there. If you're looking at term insurance, I wouldn't necessarily be looking for the cheapest term insurance, but there are term insurance policies out there that you can convert to a permanent policy without having to go back through underwriting or through the health examinations. So again, if you're going to get something now that you might be able to use later for different reasons and circumstances, it might be important to look for something that you can convert to a permanent policy later down the road.
So there are three types of permanent policies, and I know we don't want to get too deep into it only because these things are kind of tough to understand, and that's why people go to you.
That's right.
But we have whole life insurance, universal, and variable life insurance.
Right. So in a simple nutshell, whole life insurance is giving you a fixed interest rate on the cash value. You're paying in a premium. The amount of premium you put into the policy will first pay the cost of insurance. The remainder of the money will go into a cash bucket that will earn a fixed interest rate. Okay. A universal policy has a flexible component to it where you can add more later or pay less now, add more down the road when you have more cash flow. The interest rate is usually variable, meaning that it can change. And also there are universal life policies out now that allow your growth of your cash value to be linked to a stock market index. So they'll give you up to, let's say, 11% of the market on any given year. But the nice thing about that is if the market goes backwards, your cash value doesn't go down in the market. Okay, and then a variable policy is where your cash value is invested in mutual fund-like investments that go up and down in the stock or bond markets. So you have the risk of losing money, but you also have the potential of gaining money. So again, there's fees, expenses, there's surrender periods that you need to be aware of, and there's also risk in different ways of accumulating cash. And then on top of that, you have the living benefits that pay for long-term care, in some cases critical illness, like a heart attack or a stroke, different things that we can use to offset potential risks as we go through retirement.
Well, Dylan, it's a lot to think about, but that's
Yeah.
why people can go and see Dylan at your seminars or at your office, and you can visit bondfinancialservices.net or just call 413-754-4747. Just let Dylan and his staff take the steps to secure your financial future. And